Hey everyone, welcome back. We are here today to talk about Intel. We need to talk a little bit more about their really terrible conclusion to 2022, but this problem that Intel is facing really goes back a few years. So we are going to do some comparison between Intel, AMD, and Nvidia. And I could think of no better person to join me for this than Jose Najarro. Hopefully all of you are acquainted with Jose now. He is heading up the Semiconductor Investing and More podcast. Jose, how's it going today?
Pretty good, Nick. As you know, I'm super excited to talk about the competition Intel is seeing at the moment. And I already kind of took a closer look at some of the slides we're going to look at in today's episode. So the viewers, you are going to get a very good episode today, kind of talking about AMD and that competition. So make sure to stay tuned.
I think this is good stuff, and I hope the charts help put some things in perspective. And we're going to close out the episode with some bold predictions on where we see Intel headed in the next few years. Before continuing, let me remind you to hit the like button and subscribe to the channel if this video is helpful as you do your own investment research and increase your knowledge of business and technology. We really appreciate the support, as subscribing to the channel helps us continue putting out content like this. This is just, again, another breakdown of Intel's fourth quarter 2022 revenue. And of course, you can see the huge year-over-year declines in their two biggest, most important segments by a long shot: client computing and data center and AI. Jose, you have a really firm grasp of Intel's product lineup. What is going on here at Intel?
Yeah, definitely, Nick. I mean, first, a lot of things are happening right now in the semiconductor market, right? If we take a closer look at their client segment, we know the consumer space has taken quite a hit with over inventory correction. Unfortunately, that's not the only thing happening with Intel, right? They are seeing kind of that strong competition with AMD. AMD in the past few years has been kind of just really innovating in new technology in the processor, not just for the consumer side, but also from the data center side. So, I mean, unfortunately for Intel, this is probably two bad things happening at the same time. First, the overall kind of just market slowing down, and they are also seeing a bit of the slowdown in the data center side one way or another, but then just that added competition also increasing, and overall we can see the overall numbers are not that strong for the overall company.
Yeah, definitely not. So maybe to just kind of drive home the point here further, let's pick apart first the client computing segment for Intel. Full year 2022 has now been reported both from Intel and AMD. This is a look at both companies' annual revenue for the last 3 years, 2020, 2021, and 2022. You can see the blue bar chart, Intel flatlining from 2020 to 2021, basically no growth, while Intel had almost 50% growth. And then from 2021 to 2022, Intel, huge decline, yet another big increase for AMD. We should point out here, I guess, Jose, that 2022 does include a big fall off in revenue for AMD as well in the fourth quarter. But overall, still a really solid year. What has been the key for AMD here? I know you touched on it here just briefly, but again, this is the client side, consumer facing PCs and laptops. What's happening to Intel?
Yeah, so I think this is a perfect chart, Nick. Here we can see how the kind of market grew in 2021. We can see in 2020, these two players, which pretty much make up the market, was roughly $46 billion. 2021, if you add both of them, it was roughly close to $50 billion. Now 2022, it's roughly $44 billion. So it's about $6 billion less than same time last year. So first I want to say with Intel, right, that increase in that market share decreasing due to the overall consumer market going down. If you are the leader, I believe you take a bigger hit. At the same time, AMD, Nick, in their consumer side, they have the Ryzen processors. I remember when AMD first came out with their chip. I think it was in 2016, 2017. Many people were excited, right? I mean, AMD when it first started, it was a cheaper option compared to Intel. Intel was still like the power driven, the performer guy. But now coming into 2022, situation has changed. AMD, their Ryzen processors might not be the cheapest as they were before, but they're definitely now competing in the performance side. So it's giving a lot of kind of the high tier consumers who want to really kind of have a really strong platform on their desktop or their laptop. They have options, and it seems like they're going with AMD a lot more than they used to a few years ago.
Right, for sure. Yeah, and I like how you pointed that out, Jose. I think one of the bigger problems here is, like you pointed out, the overall market for this client computing group is about $6 billion less in 2022 than it was the year prior. So Intel still very, very much highly reliant on this client computing group segment. So it's going to take the bigger hit. And that's significant because AMD has pivoted away from this. It's now highly reliant on data centers and enterprise computing after its acquisition of Xilinx in February 2022. So this good stuff, Jose. Two problems for Intel. Maybe we can just pivot here now to these next charts. Same thing, but we're going to now dive a little bit deeper into Intel's data center and AI group and pit that against Nvidia's data center revenue segment. So these are not perfect apples to apples comparison, but here it is. You can see again in this slide, Intel basically flatlining from 2020 to 2021. Meanwhile, Nvidia, massive growth year over year. And then in 2022, Nvidia basically holding stable. They have not reported their fourth quarter yet. We're still waiting for that here in the coming weeks, Jose. I know we're both eager to get those numbers, but Nvidia holding stable in 2022 thus far, and another epic decline for Intel in data center and AI, peaking at negative 33% in the fourth quarter. What's going on here for Intel in this segment? Again, not as big as the client computing group, but still a significant revenue maker for Intel.
Yeah, at first I want to say, Nick, it gets me so excited for NVIDIA. I mean, look at it. In 2020, it was barely, I want to say 1/4 of Intel's total revenue, even though, like you mentioned, not apples to apple. Intel has a kind of the CPU market, NVIDIA has the GPU market. But overall, it just kind of shows the kind of quarter of 2022, how now it's almost a one-to-one comparison. Like you mentioned, NVIDIA is expected to report earnings in the upcoming weeks. I do believe they guided for pretty similar quarter again, around that $3.8, $3.9 billion for the quarter, so I don't think much changed. I want to say for Intel, again, two things are happening. Unfortunately, Intel does have a nice amount of international exposure in the data center market, as they are the market share leader. So they are seeing a bit of a slowdown in inventory there, causing a drop in market share. The second thing is, again, competition from AMD. AMD just recently released their 4th generation EPYC Genoa, which seems to be doing amazing. Their 3rd generation Milan and Milan X got great adoption by big players all around the globe. So right now, again, AMD is not just innovating in the CPU, in the consumer side, they're also innovating in the data center side. And while Intel, I want to say, is not just kind of standing still, Intel just recently released their Sapphire Rapids, I believe on January 10th, which is another data center CPU. Their technology, unfortunately, seems like they did kind of hit a lag on their technology innovation. It's taking them some time to catch up. And right now they're playing catch up. Unfortunately for Intel, this generation was a good move forward, but it's definitely not what is called for. It's needed for that catch up. So I know the overall CEO has mentioned that, hey, in the upcoming years, they don't intend to be catch up. They want to be the leader again, but we'll see how that kind of goes throughout the upcoming quarters.
Right. Yeah, it's going to take some time. I know as late as the second and third quarter of 2022, Intel CEO Pat Gelsinger still saying that they expected to lose market share in this data center segment. So Jose, you did mention, AMD is the more comparable business here because they compete with Intel on the processor side in the data center segment. But I wanted to do the comparison with Nvidia here just to kind of illustrate how sometimes every 5 to 10 years or so we get like this big tectonic shift in technology where the secular growth driver changes to something different. And right now the data center market is growing overall, but it's not primarily coming from processors, right? It's coming from something else.
Yeah, Nick, that's a great point there, and something I forgot to mention is right now in the data center side, these data centers are being used for numerous things. Recommender systems for things like video streaming, or things like Netflix, right? If you're looking for a show and you already have a profile, they need some recommender system that knows what you want to watch next because they want to keep you in their platform. Same with all these advertisement companies. They are also using it for numerous other artificial intelligence. And right now, the way technology is, GPUs are driving that force. So normally you see kind of in these data centers or these supercomputers, you see stacks, and each stack normally has about 1 to 2 CPUs, but inside of there you usually have like 8 GPUs because the GPUs at the moment are what really driving these kind of artificial intelligence computational speed. So like you mentioned, right now we are seeing that shift where maybe a few years ago it was x86 CPU performance was the one that was really driving a lot of these workloads. Well, that is true to some extent. Right now, it does seem like the better performance gain is coming from kind of the GPU market. Right now, it does seem like we need both of them. You need both of them to work, right? But it does seem like you need a lot more GPUs than you need CPUs, and we are seeing kind of that shift in kind of hardware at the moment.
Right. Yeah, and it doesn't look like that's going to change anytime soon with the viral success of ChatGPT and other similar generative AI services that have kind of hit the market as of late. Interesting development there. We'll see what Nvidia reports here soon, real soon in the next few weeks. Now, Jose, I want to get your thoughts here on bold prediction, but before that, I want to preface it with this. One last segment that we have not touched on yet is Intel Foundry Services, or IFS. Their 2022 revenue from Intel Foundry Services was $895 million, up 14% year over year. This is a segment that it did grow, so that was positive, but it's not particularly a good moneymaker at this point. Operating loss was $320 million for full year 2022. So this is kind of the segment Intel is hanging its hat on. This is where they see their future, but it's going to put them in competition with Samsung, who has a foundry service, and Taiwan Semiconductor Manufacturing. Jose, do you have any predictions for Intel in the coming years as they try to re-emphasize this external foundry service, basically where they open up their manufacturing capabilities to third parties, to chip designers like AMD and Nvidia?
I want to say first, I know you have some great predictions here, Nick, so I'll save that one for you. I just want to say for investors, I believe this is going to be a lot harder and a lot more expensive than it seems. And I think the thing is going to be a lot more expensive than it really seems, and investors are not going to get the results, or even the companies is not going to get the results anytime soon. I know we talked about this before, Nick. I personally, if Intel didn't have its foundry business and kind of just worked with companies like TSM to really design its chips and to have like the advanced packaging technology, I would prefer Intel a lot more. Just because I believe it would cost it. They do have the kind of engineering teams to kind of innovate new chips. I wish Intel was a business like that, where it was more of just a fabless design company opposed to a chip design company, opposed to doing both at once. At the same time, to some extent, I think for the overall semiconductor market is going to be good, where there is some competition, right? Because I sometimes worry, obviously there's Samsung in the mix, but sometimes I do have this worry that, hey, if TSMC is the leader, it might become to some extent the next Intel, where Intel was the leader and they didn't really have a driving force to kind of push that innovation. So while Intel focusing in the Intel Foundry business, I believe, is bad for, or the investors are not going to get the results anytime soon. I do believe it's going to force the competitions like Samsung and like TSM to keep their foot on the acceleration pedal and make sure that they're going to continue innovation. So I believe it's good for the overall market. I'm not a huge fan for it as an investor play.
That's a really, really good point. And I think important to keep in mind, designing chips is a very different business than manufacturing them. And I think the previous slides where we compared Intel to Nvidia and AMD illustrates that, right? Nvidia
Definitely.
and AMD, they only design chips. It's asset light. Manufacturing chips, like you said, Jose, very expensive. It's going to be a long, long time before Intel shareholders get any sort of positive return from this.
Yeah, I mean, Nick, right? It's super expensive to open up. That's why Intel is really pushing for a lot of these governments to give it some form of subsidies or incentives to kind of build plants. We're seeing here in United States. I know at one portion, I believe earlier last year, we were hearing that Intel was going to slow down their some of their expansions because the CHIPS Act wasn't moving as quickly. And I know they're doing that. We've discussed that in the Semiconductor Investing More podcast, where they're kind of doing the same thing in certain parts of Europe. So it's a very expensive portion. Intel needs the help. The other thing is these foundry businesses or plants take years to build, and then after being built, it takes years to kind of go to full production. So just because it's built, it might take a few months before they go to 20-30% utilization rate, and then after that, Nick, they have to find the overall kind of customers to be able to kind of get in those kind of utilization rates. So I know one thing Intel is trying to do right now is also do acquisition based with SemiTower, I believe. I don't know if that's complete yet, but that's the only other way they're trying to kind of grab customers, kind of grab some market share at the moment.
Yeah, right. No, I don't think it is complete yet. I think sometime, though, within the next few months, I think Intel expected to close on that acquisition of Tower based in Israel. So that could be interesting. But again, I think you're right, Jose. I think this thing takes years to pay off. And maybe just to illustrate that, I did think it was interesting that Gelsinger said in the last earnings call that they'll share their internal foundry profit and loss numbers. So remember, Intel, like, they want to open up their manufacturing to third parties, but they also still manufacture for themselves as well. They're not going to provide the profit and loss numbers on the internal manufacturing until 2024, which I think basically means we are losing way too much money right now. We do not want to tell you what the numbers are yet.
Yeah, definitely not an exciting time for sure for Intel.
Okay, so a couple of bold predictions here, Jose. Based on what we're seeing here, Intel said that they are going to do a soft close on their network and edge business. I'm going to go back to the original slide here with Intel's operating segments. So that third segment there that is highlighted in purple, pink, network and edge, that was flat. Third largest segment, basically flat year over year in the fourth quarter, actually increased for full year 2022. They're actually going to do a soft close on investing in new products in that segment. I think within the next few years, Intel is going to be forced to do something similar with some of these other segments as well. Specifically, I'm looking at accelerated computing and graphics. That's basically their GPU business. Part of it is going to get rolled into data center and AI, part of it into client computing. But whether it's for a data center or a PC or a laptop that we use, I actually could see Intel saying, you know what, we're losing too much money in computing and graphics. We're going to close it down and just milk it, give it the dairy cow treatment from here on out. Second bold prediction, I think as the manufacturing side of the business starts to recover, maybe in 2024, maybe in 2025, I still really think Intel's best path forward is to spin off Intel Foundry Services, or maybe even Intel Foundry Services along with some of its internal manufacturing, and become more of a pure play chip designer, kind of like you just said that you would prefer to invest in. What do you think, Jose? Do you think Intel could take a bold step like that within the next couple of years?
I definitely do, Nick. And I think if we take a closer look at this presentation, right, Nick, with the five sectors, excluding the foundry business, this would be an Intel I would like to invest into. If this was their market, even with the networking edge. I believe Intel knows that right now this foundry business is very weak. That's why they're not sharing those numbers. They know investors wouldn't be happy. I think right now it would be no point for them to spin it off right now because it's still our early business. It seems Intel is very, very confident in this and they're going to grow it. And I do believe there is a high chance, like you mentioned, for them to spin it off in the future. And if they do spin it off in the future, is when they will have some market share, where they will have some form of resume, if I may say, to say, hey, look, this is valued at this because we have these foundries here, we have these customers here, so now the valuation that we can get from this spin-off will be a lot higher. So if they do that, I think I would definitely keep a closer eye on Intel. The first prediction, though, Nick, of them kind of getting out of the accelerated computing and graphics, I think, unfortunately, for this one, this is going to be a battle they need to fight, even if it's a loss at the moment, because we are seeing kind of that push into kind of AI workloads being needed in different scenarios, and accelerated computing is probably the leading way at the moment. We are seeing kind of competitors like AMD and Nvidia announcing their super chips, which would be a mixture of like CPUs and GPUs. And I think if Intel gets rid of that accelerated computing, to me, that would be the worst case scenario, because I think it would lag them on technology improvements. So again, not an Intel shareholder, but I do believe for them that accelerated computing and graphics is going to be an important portion for the way technology shifts in the upcoming years.
That's an excellent point. And I agree with you. I kind of wonder if maybe if they were able to offload some of the very expensive manufacturing segment of the business within the next few years, if they couldn't take some of the cost savings of having to run that and really throw it behind that accelerated graphics and computing segment, if they could actually gain some more traction with that. Because you're absolutely right, like that's where the market's going, that's where the growth is. And Nvidia and AMD have already proven it is highly profitable as well.
Definitely. And Nick, one thing I want to say is I feel like obviously a lot of investors might not like this idea, but I do think it's time for Dividend to start thinking about slowing down that dividend yield for the company. This is if the semiconductor market, even though Intel is such a giant, I do believe the semiconductor market has a huge amount of tailwinds. From the mobile market, data centers, artificial intelligence, everything. The semiconductor market is in growth phase right now, and I do believe Intel, even though it's a giant, can grow dramatically, especially if it focuses on some of these great hardware. So if I was an investor, I think I would start looking at Intel a little bit closer if they said, hey, we already did pay cuts. We already unfortunately did some layoffs. If we do this kind of reduction in dividend and we start focusing on some of these high growth plays for the next years, that to me would show me that, hey, this is a company that's really, really serious right now.
Excellent. Another excellent point. Just for the record, Intel spent nearly $6 billion last year shelling out the dividend. That's not chump change, even for Intel. That would go a long way towards bolstering either their manufacturing business and getting it up and running to a point that might be more palatable to more investors, or bolstering some of those designs they have in some growth markets.
Definitely, Nick.
Jose, any final thoughts here to close out this discussion?
Only thing I would say is I think the semiconductor market is in a very, very early stage of the growth right now for 2020s. I do believe we have a lot of growth opportunities here, like I mentioned, from the automobile, from data centers, from gaming, from social media, recommender systems. So even though I believe it will always be a bumpy ride for the semiconductor industry, I think this is an industry to always try to learn more about and try to see how this technology is kind of evolving the world at the moment.
I do too. I agree, Jose. I think we've got many years left ahead of us. And I think maybe I'll just second something you said earlier as well. I would love to be an Intel shareholder when the time is right. So I guess maybe let's ultimately root for them getting some things sorted out here. Maybe it's a spinoff, maybe it's not. We'll have to see. But I agree with you. I think eventually they could have a lot of upside if they start to get some things fixed.
Mm-hmm.
Thanks again for joining us, everyone. Again, this is Jose Najarro. Check him out at the Semiconductor Investing in More podcast. Links to that are below. You can check that out for weekly podcast updates on the semiconductor industry. Jose, thanks again for joining me today.
Thank you for having me, Nick.
Jose.